All right, everybody, in this video, our goal is to answer the question everybody wants to know. Is Meta a buy? We want to know, what does it look like for 2026? But first, let's take a look back at 2025. So as you take a look at Meta, as you look back into the 2025 year end, Meta had a lot of ups and downs, but didn't actually move that much in 2025. Their share price, they started off the year, kind of at a blistering rate. It was kind of like, hey, they were coming off 2024 when they gained, 200 and some dollars a share. It was a great year. Everything looked good. So they were sitting there about, low 600, 604, something like that. And they've gone up to 660, which, while admirable, is not the massive gains they were expecting, especially during the year. They got all the way up to 736 in February before that April dip, and got all the way up to 769 in August before peaking out and returning to those 650 levels. So Meta kind of had a turbulent year, but it was highlighted by Meta saw great growth. So top line revenue for the last 12 months has been $189.5 billion. That is up from $164.5 billion that was reported in full year 24 and $134.9 that was reported in full year 23. So that is great top line revenue growth that nobody can argue, and they're seeing it even in the profit as well. They're up to $155.4 billion in profit, up from $134.4. So the margins are still holding strong there. The concern Meta had this last year, and what's caused their stock to sink since their Q3 earnings, was what does it look like in terms of their capital expenditures over the next few years. So everybody knows with the AI data center build out, everybody is investing money. Meta's investing money. Amazon's investing money. Google's investing money. Everybody is going in trying to get all in because they don't want to lose the AI race, which 100% who wins the AI race is going to have a massive effect moving forward. The challenge Meta's going to have is how much is it going to cost them to get that build out done? Because right now they keep guiding towards higher and higher CapEx every quarter. Is that number going to continue to increase? Hopefully not, because eventually there has to be a return on this investment. At some point, Meta's going to have to show, hey, this build out is going to help us grow by X amount. So far, they've shown that, but another concerning trend you'll see is Meta's EPS was 23.2 on a basic EPS, which is actually down from 2024 of 24.6. Now, they're forecasting to have a good quarter, so I expect that to come up a little bit and be roughly flat. But as you can see, on an actual, what they made basis, they actually didn't improve from 2024, and we're actually slightly down, which is interesting. And this is where we start getting into the 2026 outlook. So obviously, there's a couple different ways to look at it. You can look at this from a Meta point of view, and you can also look at this from an AI point of view. So I'll start off first with the Meta point of view. The Meta point of view is, can they continue to keep up? Can they continue to compete? Meta's got a lot of great stuff from a perspective of their products great. Their industry, they're in the right industry and stuff like that. They have a lot of good stuff, but can they continue to capitalize on those investments? How much are they going to have to spend? The other thing, if you look at it, is some of their, earnings ratios are getting very expensive. So Meta is now, as of today, trading at 28 times their last 12-month earnings, which is actually down from their September result of 31.7, but that's not because of increased earnings, that's because of decreased stock price. So they're still trading at elevated levels. Historically, Meta's traded in that low to mid 20s and is currently trading at 28. It's not an extreme number, and I wouldn't be overly concerned about it, but it is something to watch, especially with how much of their growth is currently projected, not realized. Then, as you take a look at their price to sale ratio, which is kind of an interesting metric, not necessarily for tech companies because it gets a little skewed, but just sort of an interesting number to keep in general. To give you an idea, in December of 2022, it was 2.74, which gives you an idea of that is dirt cheap. And, obviously hindsight's 2020, but that would have been a great time to buy Meta stock. But even as it sits today, it's sitting there about 8.7 times their times their annual sales, which is consistent with where it's been historically. It's not getting into those, high growth numbers that you saw back in the teens and stuff like that, but not getting to that dirt cheap level of $2 that we saw in 2022. So both of those are, probably right where they should be. Their price to book ratio has continued to elevate, but that's more so of an effect of earnings than it is from a concerning perspective. Usually companies that have high earnings especially people that are returning dividends and stuff like that, are usually have price to books that are a little higher. So there's not really a whole lot to be concerned about. The one area potentially you could see a little bit of concern is their debt level just continues to rise. As of the most recent quarter, they ended at the debt level at $51 billion. Again, this is a company that up to 2019 had $500 million and up to 2023 had 27. So they've essentially in the last couple years doubled their debt load. Now they have more than enough cash on hand to make up for it, and they're generating free cash like nobody else. So again, not something to be worried about, but I would be, something to keep an eye on. So as you can see, their free cash flow in the last 12 months has been $44.8 billion. So again, a very healthy cash flow and can easily service the debt on that. They're also, they're also repurchasing stock, which is great to see, and they've done so every year consistently. Is another great way to return money to shareholders that isn't through dividends, which is obviously taxed twice. So that's great to see, and their balance sheet looks super strong. Again, the real question with Meta is, can they keep this torrid growth rate up? And the other thing that's kind of out of their control is, how does this, data center stuff look out as we look past the end? You're hearing a lot of references from this data center, from this AI perspective of, this feels a lot like 1998, 1999, right before we entered the dot-com bubble. Everybody's building. We have this new revolutionary technology. All these companies are doing it, and there are a lot of parallels. Now, there's a lot of things that are different too. Like obviously, it's not concentrated in a couple hands. It's the companies that are doing well are companies that have done well. Even like Meta, if you took away the AI business, still sells product. They still sell things. Not all of their stuff comes from AI. It's becoming a larger portion of their business, but it doesn't all come from there. So you still have a profitable business underneath. The challenge you're going to run into, and this was referenced in the Wall Street Journal a little while ago, and I think it was a great article. If you haven't had a chance, go back and read it. They talk about what is the effect of the actual end users. So right now, Meta's job is to provide the data. They make the models, so they allow people to manipulate these AI tools. The challenge you're running into for all these AI companies, they're not really profitable. None of them are profitable. If you look at Anthropic, they're not projected to be profitable anytime soon. ChatGPT, or I guess the company that owns ChatGPT, OpenAI, they're not projecting to be profitable till, at the best case, their own projection is 2030. And that's usually the rose-colored glasses. So the question is, can these companies that are losing money, OpenAI is losing billions of dollars a year, can they continue to take these losses forever? At what point does those shareholders go, I want my money back? Because you've seen it with Oracle. When it becomes too dependent on one company, you start to see this. Well, if the company starts demanding their money back, everybody starts to go at the same time. And then what happens if these companies aren't making large investments in data centers and don't need the data center space? What do you do then? So it's kind of one of those things of, how much do you believe in the AI outlook? This is kind of really the second point is, do you believe the AI outlook continues in 26? I mean, honestly, it's shown no signs of slowing down, and really everything's continued to be at a healthy level. If you look at it, none of the companies are seeing decreased demand yet. Everybody is still on the track. The cost of borrowing capital is coming down gradually, and Trump says he wants to continue to decrease the cost of capital, which just provides provides better outlook, and honestly makes it easier for these companies to continue to raise money and stuff. So you see all of these people across the board, borrowing. So I think Meta looks great, and that's exactly what analysts are saying too. Meta's average, now this is just the average stock price, is sitting up in the 800s. It's 825-ish is what the analyst consensus. Now, you do have your, people who, they only have one sell rating, and that was at 655, which is $2 per share higher than where it sits today, which just to give you an idea of, what they're sitting on. And the high stock price is $1,117, which represents, 60, 70, 80% growth. So you're sitting here and taking a look at it. This is a stock that's kind of taking, because of the CapEx numbers they reported and how much they plan to spend, is kind of taking a beating in the last 6, ish months. But ever since August, kind of they took that beat. They kind of peaked and then have kind of taken a beating since then. But I mean, this is a stock with great underlying fundamentals. They're generating free cash. Their debt load is still serviceable. And honestly, the AI revolution, stock increase, everything has not shown any sign of letting up. There have been studies that have started to show efficiency gains are coming from AI, which is going to be important. There are, none of the companies that are currently losing money are projecting to cut budgets. Those are all still ready to go, continuing on. And I mean, Meta's, on the advertising side is making as much money as ever. Meta's going to continue to make money from advertising. I know people they love Instagram. They love Facebook. I mean, this is synonymous with the way that we work. This is not a company that's going to experience a long downturn. I think Meta's honestly a stock that I would rank as one of the most defensible stocks right now because the stock price can't fall that much. Like, it's going to have great digital advertising revenue regardless, especially when companies are out there, hey, we want our new product and stuff like that. And if they continue to retain the AI boom the way they have, and they've done a great job at releasing it, I foresee this stock going probably close to analyst estimates of that 825 number. So, I mean, you're sitting there looking at it, you got 25% upside on this Meta stock. So I think 2026 is poised to be a great year after kind of an uncertain 2025, which they still managed to make $40 to $50 a share. So no arguments there. I think they're poised to have a great year. And this could be a stock that you just want to ride, for at least the next couple years until we see something different. So overall, I think it's a great Meta's a great investment opportunity. And it is definitely one of the Magnificent Seven stocks I would hang on to right now. So as we look out, we'll see how it turns out, and then we can see, what the next 6 months looks like. Meta reports earnings coming up, so I would definitely stay tuned for that.